Hi guys, it's Trader Michael here. Today we will talk about the Alligator Indicator, which is a technical indicator that defines the market state. It was created by American trader and psychologist Bill Williams, who describes this indicator first in 1995 in his book Trading Chaos. He studied the markets for many years and he concluded that the market is chaotic. And trading is a psychological game and you need to understand the trading psychology and understand the behavior of market participants to realize where there might be potential zones for accumulation and spot price exit levels. As you know, the market is either trading on or consolidating. He observed that the trading markets are 15 to 30% of the whole time and the rest 70% is the sideways movement, which is where most of the traders fail. But thanks to the alligator indicator, we can identify the current market situation. The name alligator comes from the similarity of behaviors between the market and the title reptile, meaning alligator for the longer part is tracking its prey, observes, plans the attack, and then with quick move grabs the victim, eats it, and then hides and calms down. So that is basically the history of the name, which is interesting we can say, but hey, if it works, I don't mind that. So Bill Williams himself stated that in order to get entry signals to the alligator, he was adding a couple other indicators which he also created. I mean the awesome oscillator and fractals. So you shouldn't use the alligator by itself to spot the entry point, since it is very laggy and therefore the risk-reward ratio will be very poor cause there is no clear rule where to set the stop-loss order. On the complete strategy I will make another video, but for today we are focused solely on alligator and the way it functions. So let's switch to the screen view. So let's add to the chart our alligator indicator, hit the indicators tab, click the alligator and it is automatically added on our chart. So as you can see, it consists of the 3 moving average line, 3 moving averages, and they are called from the parts of the alligator's head. The green one is the fastest one, is the 5 period. It is the lips. The red one is the teeth. It is the 8 length moving average. And the slowest one, the 13, is the jaw. It's the slowest moving average. So, and the default settings, we need to change them because they are somewhat different by default. And they need to be moved in the future a bit, so it would be more visible to us to read the current signal, the current, we can say, the indication. So there was a 13 period moved by 8. Yes, it was by 8 bars. Teeth period was 8 moved by 5 bars. Yes, and lips were 5 moved by 4. Smoothing, yes, source high plus low, yes. I can mention, but I guess you probably know that it is not based on the candles. It is based on the entire max high and max low divided by 2. It is not based on the opening and closing price of the candle. So with that being said, hit OK. And right here we have the corrected and complete the indicator added to our price chart. So basically how it works is that it indicates the period where the price is beginning to gaining the momentum and beginning at downtrend, or in this case the downtrend, and the lines are starting to spread wide, which indicates that the trend is very strong. When the lines, for example, as you can see right here, they are crossing each other back and forth, it means that the alligator sleeps. Yeah, as I mentioned in the beginning of the video, this is the phase of the sleep where it's calmly resting, and it means that the market is moving sideways, and the green line, the lips, are crossing back and forth the 2 other lines. So it means that we have a sideways move and no clear trend. Again, the situation Like here, we have a sideways move, the ellipse is crossing back and forth, the lines are very close to each other, as you can see right here, and here we have the situation where the indicator, the ellipse, crossed two other above and started to gaining the momentum, and the lines are starting to spreading wide. So it means that this is the beginning of a trend, of a very strong trend. Another thing is that the strength and the length of a trend depends on the period of time where the market was, the alligator was sleeping. So the longer the sideways move was, the stronger and the longer trend will occur. So maybe let's mark those and describe those parts with the vertical lines. So we have somewhere over here, we can see that, let's make it thicker. That's the first line, and again. Right here, this is the period where yes, this is the moment where the alligator is sleeping. And now let's mark the situation where the alligator is eating. Right, this is the moment. Why it is not color? Okay, so right here we have describe the situation. So we have here the sideways move, more or less. Right here the volume was low, or at least the market wasn't decided which direction to take. And right here we have clear beginning of a trend, and therefore you can see right here, maybe I will move this line. Right here you can see that the lines were spreading apart, therefore showing us that the market is in a very strong trend at the moment. So the time period for which you should use the alligator indicator are H4 and D1, so higher time frames. And so this is that's the first thing. And if you wonder to which asset it applies to almost everything. The Bill Williams was creating it based on observations on the equity markets, on commodities, and on currency pairs. So it will apply to any asset you are trading on. So, as I said in the beginning also, that the full strategy is a combination of the other two indicators, the fractals and awesome oscillator, but the alligator indicator itself can also give us some potential signals what we can do with our current strategy. For example, if we are in the situation described here, the eating phase, the trending market, if we have open position in the beginning of this trend, the lines that are spreading widely are giving us the signal that the trend is strong. Therefore, if we see some pullback, for example, on 20%, up to 20% of the whole move, we could add to our winning position. So that's the first thing that we could take advantage on with this indicator. And the second thing is that when we have the beginning of a sideways move, we could make something like this, which I already did. Make clearly visible support and resistance line, and right here we could utilize our scalping strategies and just stick to those support and resistance level, which are given by the levels when we saw the crossings of the alligator indicator. Because we see right here, we for example entered the market, price reversed, right here it crossed again to the downside, again to the upside. So this is a clearly sideways move, and therefore we should utilize a different strategy, different approach. So that is the one way to do it. So let me guys remind you briefly why you shouldn't trade solely with the alligator indicator. It is because the classical rule gives us the signal when, as I told you, when the lips crosses the other two, the teeth and the jaws, in one direction. So, for example, right here we would have 1, 2, 3, 4. At this candle, you would be entering the market, and the stop loss, the logical one, would be right here, right? And this sometimes, in some cases, it would be a bad risk-reward ratio. In this situation, it would work out well, but let's see, for example, right here you have also, very similar situation. We have the signal to enter, so we need to 4 candles step back, 1, 2, 3, 4. You would enter at this candle, but the exit signal in this situation, in this classical trading strategy, is when the lips is crossing backwards the teeth line, which is this one. So you can imagine it was in this moment we need to cross 4 candles, so 1, 2, 3, 4. So it would be right here. So let me measure that. Range of price. We were saying it would be, let's see, 1, 2, 3, 4. It would be this candle. So okay, it was 90 pips, but look how much you would risk at this situation. More than that, 123, 120, 123 more or less. So it would be less than 1-to-1 risk-reward ratio. So that is why you shouldn't use the alligator indicator by itself. So guys, that is all from my side in this video. Let me know, guys, do you use this indicator on a daily basis? Have you ever tried using it, or did you maybe stopped using it? And let me know in the comments why is that. So thanks for watching, guys. Until the next one, take care, bye.